Assalamu alaikum, dear students. My name is Qunber Raza. I am tutor for Advanced Taxation UK variant. So in this video, a short clip, we are going to discuss the changes between the tax rate based on Finance Act 2022 and 2023. Who are supposed to look for this video? So this video is relevant for the ones who initially planned to appear in March 2024 exams, but unable to appear in March 24, and due to any of the reason they have to postpone their exams to June 24 or any later attempt. First. Second, this video is relevant to the ones who attempted the ATX or TX in March 24 or in December 23, unable to clear, and now they are planning to attempt in the June 24 or any later on session. So the one of the key difference between these attempts is like the Finance Act changed from 2022 to 2023. Just to give you a reference, the Finance Act 22 refers the tax year 22-23, and the tax year 22-23 is examinable in June 23, September 23, December 23, and March 24. If you have studied TX or ATX in any of this attempt, and this video in particular belongs to ATX, and now due to any of the reason you are going to transfer your attempt in June 24, September 24, December or March 24 exam setting, then it means you will be examined based on the Finance Act 2023, means the tax year 2023 and 24. So this video highlights the changes between these Finance Act, between these two tax years, so that it will be easier for you to track the changes wherever happen. So the first area of discussion is around the income tax. In the income tax, in the Finance Act 2002, the basic rate band 1 to 37,700, high rate band 37,700 to 150, and the additional rate is over 150 above. But in the Finance Act 2023, if you look, the percentages are same. Basic rate band is same. The only change is in the high rate band limit. So the starting point is same. The only change is in this high rate threshold. So previously, high rate was still 150,000, but now the high rate is still 125,140 only. And now 125,141 and onwards would be the high rate band. So via this change, there will be change in the application of the high rate and additional rate band based calculations. Nothing else would be changed. Now, second of this, there was a concept of nil rate band. So for savings income, if a person is basic rate taxpayer, there was a 1,000 exemption, 500 exemption. So this remains the same. But for dividend income, there was a nil rate band, which was 2,000 for all of the persons. The nil rate band concept is there, but the 2,000 is changed to 1,000. So any question which involves the taxation of dividend income, there will be a minor / slightly implication of this. Having said that, the 0% of savings income up to the threshold of 5,000, the special rule, that is still applicable, no change in that. If I move forward with respect to the personal allowance concept, the personal allowance concept remains same, like 12570, transferable amount, income limit, adjusted net income is 125,140, then there will be no personal allowance. So all these concepts remains the same with respect to whether the person is UK resident or not resident. After checking for the automatic not resident, automatic resident, the third test we do perform is the ties test. With respect to the ties test, we need to consider how many ties have been met and the number of days spent in the UK. So the residency status table, which is given in exam, always remains the same. There is no change to that. If I move forward, child benefit income tax charge, if less than 50,000, no child benefit income tax charge. If more than 60,000, all of the child benefit income tax charge will be refunded back to the government along with the income tax liability. And if the adjusted net income is in between 50 to 60,000. Every £100 increase, 1% of child benefit will be added into the income tax liability. No change in that, any of the amount, any of the figure. Individual savings account, there was a limit of 20,000 with respect to the individual savings account. No change in that. If I move forward with respect to the employment income, so this slide in particular talks about employment income. With respect to employment income, the car benefit percentages remains the same. So for example, zero emission car, electric car with up to 50 gram per kilometer with certain miles, different parameters, up to 55, 54, a different CO2 percentage, 55. So all these percentages remain the same. There is no change in that. Whereas if I look into the fuel benefit, the base figure to calculate the fuel benefit was 25,300, and now this figure is changed to 27,800. So everything else remains the same. It's just you need to put the figure of 27,800 into the fuel benefit calculation. In the same way, with respect to the van benefit, the van benefit amount was 3,600 and van fuel benefit amount was 688. Now the van benefit amount is 3,960 and the van fuel benefit amount is 757. Needless to say, this will be given in the exam. Now, if I move forward, the rent-a-room relief for property income. So rent-a-room relief, which was part of the property income, that remains the same. There is no change. With respect to the pension scheme limits, annual allowance 40,000, the minimum allowance 4,000, threshold income limit, lifetime allowance limit, maximum contribution higher of 3,600 relevant earnings. All these thresholds remain the same. The threshold income concept is for ATX only. That is not applicable for the TX students. Whereas if I move forward, the approved mileage allowance for cars remains the same. There is no change in that. The capital allowance, rate of allowance for main pool for special rate fuel, the capital allowance percentage remains the same. For cars, the car capital allowance is linked with the CO2 emission. If the car is new with zero emission, 100%. If the CO2 emission is between 1 to 50 gram per kilometer, 18%. And if CO2 emission is above 50 gram per kilometer, CO2 emission would be 6%. All these things remains the same. The only, I would not call it as a change. The only additional information now onward provided into the exam would be second-hand car with zero CO2 emission will get capital allowance at 18%. So this is not a new concept. This is old concept. It's just that this point will be provided in the exam rates table. So that's why I just highlighted. Otherwise, that's not a change in the text rate. Previously, this concept was there. Okay. Now, if I further continue with the rates of capital allowance for AIA, annual investment allowance expenditure limit, 1 million allowance rate 100%. There is no change in that. The structure and building allowances, a straight line method, 3%, no change in that. However, having said that, for companies, there was a concept of enhanced capital allowance, where main pool super deduction was 130% and special route first year allowance was 50%. This enhanced capital allowance was introduced for 1st April 2021 to 31st March 2023. Since now we are in Finance Act 2023, which starts from 1st April 2023. Hence, the concept of ECA is no more applicable. Okay. I repeat, the concept of ECA is no more applicable. However, instead, now the applicable concept is, what if assets on which ECA was claimed is now disposed of? So I purchased the asset on which ECA was claimed. Now that particular asset is disposed of. What will be the implications of the disposal of assets? So this is something which is now applicable in the TX and ATX exam. With respect to income tax, cash basis, the optional philosophy. it's still applicable. Revenue limit 150,000. There is no change. In with respect to the losses, cap on income tax relief 50,000 or 25% of other total income. There is no change. So these all changes discussion summarizes the changes relating to the income tax. Now, if I move forward with respect to the corporation tax, on the corporation tax front, there are some of the, I would call it, the major changes. And the major changes are the rate of tax previously was straight away 19%, and there was a profit threshold. If your profit exceeds the threshold amount, then you considered as a large company, and if large company, you are supposed to pay tax and installment. In the Finance Act 23, there are two types of rates. One is a small profit rate, second one is main rate. A small profit rate is applicable if your profits, augmented profits, are below this lower limit. And if your augmented profits are above the upper limit, then the main rate is applicable. And if your augmented profits are in between of these two limits, then there is a concept which is called as marginal relief. Marginal relief would be applicable, and there is a standard formula to calculate this marginal relief. The marginal relief is calculated as upper limit minus augmented profits into a standard fraction, which is like 3 upon 200 into taxable total profits divided by augmented profit. So it is a new concept. I would not say it's not new, but for me being the TX and ATX tutor for approx 1.5 decades, this concept is not new for me. So exactly in this way, corporation tax used to be calculated, make it somewhat 7-8 years ago. And to give relief to the companies, the ministry has decided to suspend the main rate for the time being. So now they are reverting it. So that's like a change with respect to the year-on-year basis, but it is something which is important to you guys. Having said that, now some of the things with respect to the ATX, I missed to cover this on slide. With respect to ATX, in the R&D expenditure, there is some change in the R&D expenditure. I missed to incorporate this in the slide, but for sure, the updated notes and the lectures would be reflective of this, the updated R&D expenditure. Okay. R&D expenditure and its tax credit. So that will be part of the corporation tax notes. If I move towards the VAT, so with respect to VAT, in the standard rate, there is no change. The registration, deregistration limit, there is no change. Whereas, when I talk about the penalties for late return filing, there are major changes in this regime. Previously, there was a concept of surcharge period or notice period. Now the concept of surcharge period, notice period is abolished. The new penalty regime is introduced where we take the return late filing in a different way and the late payment in a different way. So there is a concept of penalties for late VAT payment up to 15 days. There is no penalty. For 16 to 30 days, 2%, and more than 30 days, there is a 4% daily penalty. Right? In the same way, if you file return late, there is a point-based system now with respect to the penalty. So these are the important change with respect to this value-added tax. And the only change is on the front of late filing of return and payment. Apart from this, there is no change in the VAT universe as well. If I look into the inheritance tax, I'm not going to call out. There is no change in inheritance tax. Everything in inheritance remains the same. So I'm not calling out any of the points, rather moving forward to the main discussion. With respect to capital gains tax, there is no change in the tax rate. The tax rates remains the same. There is only one change with respect to the capital gains, and the only change is the annual exemption amount. Previously, the annual exemption amount was 12,300. Now the annual exemption amount is reduced to 6,000 pounds per annum. The principal remains the same. There is no change in any of the principal. The only change in limits. The BADR limit, the investor relief limit, the rate of tax all remains the same. There is none of the change in any of this fund. With respect to the direct taxes, NICs class 1 employee NIC, the thresholds, the bands remains the same. The only change is in the percentages. It's 13.25 is changed to 12, 3.25 is changed to 2, nothing else changed. In the same way, class 1 employer NIC 15.5 is changed to 13.8, nothing else has been changed. In the same way, if I look class 1 ANIC, 15.05 changed to 13.8, 3.15 changed to 3.45, low profit limit remains the same, linked with the personal allowance. Class 4 NIC rates have been bit reduced, giving some breathing space to the taxpayer. The next, rate of interest, which is applicable throughout the tax. Previously, the official rate of interest 2%, now it is 2.25. Underpaid tax rate is 3.25. Now the interest will be charged at 6.5%, considering the global rise in the interest rate. And the overpaid tax credit was at 0.5%. That's also correspondingly increased to 3%. Standard penalties for errors linked with the behavior of taxpayer, careless error, deliberate not concealed, deliberate and concealed. The error penalty remains the same. There is no change in that. And the last element, and this only belongs to the ATX student, stamp taxes with respect to the FA23. There is no change in the stamp taxes. So with this, a short, quick summary that all summarizes the changes for the tax rates between the tax rate and allowances and the major methodology, if any, from Finance Act 22 to 23. I hope that you guys will find this video helpful to you. Take care. Goodbye.